Well, if you've got any questions, feel free to stop me. Okay, so this is a paper on open source innovation with Chan Lim, who just joined Pepperdine down south from you guys, and Shiwei, who is a PhD student at RSM. She's on the market this year. I highly recommend her. So I don't know if you guys are on the market this year, but I'd recommend checking her out. So as I said, this is a paper on open source innovation. Okay, in particular, we're looking at the private value of open source innovation. So that's the value that accrues to the innovating firm itself. But let me kind of start with innovation in general. So since Schumpeter's work back in 1910, we know that innovation has been is a major driver of economic growth. And recently, a lot of that innovation and the economic growth that comes from innovation has been in software-centric fields like AI and cloud computing. Now, innovation in these fields is usually incremental, right? Each new piece is a small improvement on the previous piece. And it's also very fast-paced, right? These things happen relatively quickly. These are two things that the patent system does not accommodate very well. Okay? So what we've seen is that more and more developers, when they want to protect their innovation or sort of when they're thinking about what they're going to do with their innovation, we're moving away from a patenting system. Interestingly, what we've seen is the growth of a different type of innovation system where the innovation is made freely available. Okay? So that's called the open source system. Basically, I write some software code and then I make it available for anybody to use for free. You can kind of see it. Okay? Now, somewhat surprisingly, we're seeing a lot of companies engaging with this. So a report back in 2022 found that 90% of Fortune 100 companies use GitHub. GitHub's kind of the biggest platform for developing open source innovation. And it's kind of become synonymous at this point with the idea of open source. So if we kind of get into the economics, it's unclear what value these profit maximizing entities derive from open source innovation, right? They're investing in developing this innovation and then giving it away for free. But regardless, at this point, if we want to get a complete picture of how innovation is contributing to economic growth, it's become essential to understand what's going on in the open source system. Okay?
So you want comments right away?
Yeah, give me.
So I feel like there's a disconnect. There's a lot of three key parts here, right?
Okay.
So innovation on the one hand internal within the company, and then economic growth is more like a macro thing.
Mm-hmm.
And then open source, right? I mean, my first question is, how is this different from like building a brand, right? A brand is valuable. Why not?
Absolutely.
Right? So the reputational aspects to all of this stuff, right? That I would think are valuable.
Absolutely, that's going to be one of the things that could provide value. Okay. So scanning the literature, we found 17 different channels that have been sort of hypothesized or theorized as potentially creating value from open source innovation. These are very indirect channels, right? Because you're not actually like selling it, you're generating value indirectly. I'm not going to go over all of them because there's tons. I'll point out a couple of things, okay? So the first one that I really want to point out is an important aspect of open source innovation is that it lacks legal excludability. The typical innovation investment problem is that the inventor pays all of the upfront cost, and then if other people get the innovation, then they can use it for free, and they don't get any of the payoff. So to create incentives to invest in innovation, usually systems like patents will grant monopoly rights. You're the only one who can use that innovation for the next 20 years, so you can generate revenue, generate profits off of that, off of commercializing that innovation, to give you incentives to invest, right? Open source doesn't have this. It lacks the legal excludability. So it means that there's the potential for positive spillovers to competitors. Okay? And this is going to be the major cost that we should be worried about when thinking about open source. This could help firms, okay, facilitate iterative technological development by helping the market grow at large. I share my innovation, you share your innovation, and we're able to develop the technology together and faster than we would otherwise. But on the other hand, right, you're giving the innovation away for free. Your competitors could use it, could improve their products, and then they're stealing market share from you. That's going to be the biggest cost that we foresee with open source. As I said, lots of other channels. If you've got one in mind, almost guaranteed it's going to be in here. We've broadly grouped them into 3 categories. Benefits from adoption, driving adoption of other products. For example, maybe you give away some aspect of a product for free to drive demand for a commercial aspect of the product, or a subscription service for a better quality version of that product. Benefits from community, could capture anything from reputation, brand, or benefits in the labor market. And then finally, competition concerns. So capturing some of what we're talking about, ways that you might be able to mitigate the potential for positive spillovers to competitors, but also maybe using open source as a way to undermine competitors' market position, like we saw DeepSeek do with ChatGPT. So we're trying to get a sense of what's going on in this setting by studying the private value that's generated for open source innovation. We need to measure the private value. That's pretty difficult to do. There is some existing literature. They follow what is called a cost to replicate approach. Okay, so the idea is you have a given piece of software. It has a certain number of lines of code. Software developers can write some number of lines of code each hour, and they get paid a certain amount of money for each hour. So you can figure out from there how much does it cost to pay a software engineer to replicate that particular piece of software. Of course, this doesn't really capture many of the indirect channels of value generation, so we think there's room for improvement here. In particular, we're going to be looking at open source firms. We're going to look at the private value that's generated by their innovation by leveraging financial markets. In particular, we're going to look at investor reactions to the releases of these open source projects to be able to give them to be able to assess their value. And then we're going to look at the association between the value generated by those projects and the future growth for the firm and also for its peers. So we can get a sense of whether there are these potential spillovers to competitors. As I said, there's been some previous work on this already, but we think that since there's new data on open source activities available on GitHub, this creates new opportunities for investigating these questions. In particular, we compile a comprehensive project-level data set of public firms' GitHub activity from 2015 to 2023. And we provide a new ex-ante measure of the economic value of open source innovation based on the stock market reactions to project releases following the popular methodology developed by Kogan et al. 2017, which they used to estimate the private value of patents following similar sort of reactions. Okay? So, overview of the results, because there's no way we'll get to everything in 30 minutes. First of all, we find that firms active on GitHub represent a significant share of the US market, and they also span multiple industries. Okay, we're not just looking at the software industry, but we are looking predominantly at software. So I think this speaks to the growing scope of software within the overall economy. We find in general that open source firms are large, they're more innovative, and importantly, they also seem to face less competition. So sort of initial evidence that maybe firms are concerned about these potential spillovers to competitors. In our sample of projects that we're able to estimate private value, the average private value is about $842,000, okay? Mainly coming, as I said, from the software industry, but also from AI projects. AI projects tend to have the highest average value. Of course, there's going to be some questions about our methodology. We do extensive robustness tests and validation exercises to really try and investigate whether these investor reactions contain value-relevant information. For me, at least, I think the most convincing is we find that the private value of a repository, of a project when it's first released, that ends up predicting the future popularity. Okay, so how much use does this repository actually get? Investors seem to do a pretty good job of estimating that when the project is first released. So it seems to, these estimates of value seem to have value relevant information in them. Okay? We also do a back of the envelope calculation to try and get a sense of how much value was generated on GitHub in total. From 2015 to 2023, sort of extrapolating our estimates from this subset of repositories, this totals about $900 billion in total, okay? So I think that's a fair amount of value that's being generated in open source.
Another quick question. So to which
Please.
extent are these firms, first of all, for profit versus institutions? Like OpenAI supposedly is not for profit, right? It's a foundation. And then another question is to which extent are these firms actually profitable, right? Or is this money that's left on the table, like what are these firms?
Yeah, so first of all, in terms of these firms, we're looking at publicly traded firms, okay? So not sort of institutions, not nonprofits, so they got to be publicly traded. Although at this point, OpenAI has done most of its job converting over. But that's the focus on our sample. So we are looking at profit maximizing firms. To what extent are they leaving money on the table is a little hard to estimate, right? Managers' assessment of the NPV of investment opportunities is always a little bit shaky. If you think on average, though, they do a pretty good job of estimating these things, of capturing sort of the money that's available, then it seems to be, this seems to be giving us a pretty good sense of that. Of course, anecdotally, I guarantee you, there are some managers that are making bad decisions that are leaving money on the table. If you want to talk about the correlation between profitability and open source activity,
That's what I was wondering.
yeah, insignificant. Insignificant. In terms of the actual determinants of value, or at least what correlates strongly with private value, we find that firms facing less competition are able to capture more private value, and also firms that use licenses that are more restrictive on commercial use. If I have time, I'll talk more about licenses. But this really speaks to this idea that firms seem to be thinking about the potential for positive spillovers when engaging in open source activities, and they try to limit the extent to which there can be these potential spillovers. This seems to be, at least in our data, the most important explanation for for how firms are engaging with open source. Looking at future growth, we find that these valuable projects are associated with substantial firm growth. So they predict future growth for the firm that's innovating itself. But interestingly, we also find some evidence of creative destruction. Okay, creative destruction in that the firm is creating something new, and that seems to be destroying value for its competitors. Okay, we'll have some questions here about omitted variables, and I think if you're going to shoot some holes in what we're doing, I think this is a place that you could do that. But I think overall our evidence really seems inconsistent with this idea that open source is providing value to the market at large, that there are these positive spillovers. We're not really finding any, the evidence is very difficult to reconcile with any sort of story where there are these positive spillovers, suggesting that managers are being selective in what they're putting on open source to limit those potential spillovers. Okay? Any questions about that? Because this is really the overall picture, and I've got 10 minutes to fill in details, but no? Okay. I guess I'll just mostly skip the literature review. We contribute to literatures on valuing innovation, the sources of private value in open source, and also technological innovation and growth. Little bit of institutional background. So if you're not familiar with GitHub, this is what it looks like. Innovations on GitHub are posted in what's called a repository. So this is a repository. In particular, this is a PyTorch repository. To be able to post a repository, firms first need to create organizational accounts. Sometimes those organizational accounts are very clearly, Amazon.com or whatever. Sometimes it's not so clear. So for example, this organizational account is just called PyTorch. It houses the PyTorch repository, but it's owned by Meta. So we did some extensive matching to be able to match up the organizational accounts to publicly traded US firms. Here in the middle, these are all of the files. This is where you can access all of the code that is actually in the repository. Up here, we have information on engagement. Most importantly, I want to point out stars. So a star on GitHub is basically a bookmark, right? So it's somebody saying, oh, I want to keep track of this repository. I want to be able to find it easily, know when it is doing any sort of updates. And so stars are going to be our measure of future popularity. Okay? We gather data on stars as of February 2024, and we're going to look at the extent to which private value is able to predict the number of stars that repository ends up getting in the future. And as I said, it's able to predict it fairly strongly and fairly robustly. Over here, we've got a bunch of information that ends up being pretty useful. I'll highlight that we've got these self-reported classifiers, which we use as input for a large language model to create our own systematic classification of topics for repositories. We also have information here about the license, and so let me talk about that really quickly. So in theory, a repository is only truly open source if it has a license stating that you are allowed to use the code without any restrictions. That is technically open source. But it's not the only type of license that firms have on GitHub. So there are other types of licenses like copyleft licenses. In a copyleft license, basically it says any work that uses this work needs to itself be made open source. Okay? So imagine that you are a firm wanting to make use of the PyTorch repository. Suppose that it has a copyleft license. You need to be careful, because if you're going to use the PyTorch repository at some point for some minor part of your code that's going to be part of the big product that you end up selling, if you aren't aware of this, okay, or if you accidentally use PyTorch, then you might be subject to releasing or to open sourcing your entire source code for your main product, okay? So there are a couple of different types of these licenses. We're going to collectively call these licenses restrictive, okay? So there are permissive licenses, which allow complete open source use, and then there are restrictive licenses, which in some way limit commercial use, okay? We find that repositories that have these restrictive licenses end up generating more private value, or they're estimated to have more private value by investors. So it seems that even in this system where the idea is giving innovation away for free, investors see more value to the firm if you're able to, in some ways, restrict the potential positive spillovers to competitors. Okay? Okay. I'm going to largely skip the data. It's coming from GHTorrent and GitHub API. We use a number of different things, including large language models, to estimate topics, but also to estimate the extent to which the repository complements the firm's commercial products, and also how novel the repository is relative to existing solutions. In general, we see an increase in GitHub activity over our sample period. We've only got about 18% of public firms that are actually active on GitHub, but they represent 2/3 of the market in terms of market cap and 80% of total R&D expenditure. Of course, now obviously not all of that R&D expenditure is going to GitHub, but it seems that GitHub firms are an important part of the US economy, and they're doing a lot of the innovation in the US economy. We have a lot of other summary statistics in the paper that I have to skip. Let me talk to you a little bit about our actual methodology here, because I think this is important. So we estimate the value of the repository using stock market reactions to the repository release. There's a lot of assumptions here that we need to consider. First of all, do investors even know about repository releases? Are they made aware when a repository is released? Well, anecdotally, especially for more valuable repositories, yes, this seems to be the case. So many firms have an official website where they report their open source releases. For example, Microsoft, Amazon, Apple, Salesforce, and Meta all have official websites. More valuable or interesting repositories will also receive media coverage on tech websites like Wired, TechCrunch, or The Verge. And they'll also get posted and shared on social media, particularly you'll see posts on Reddit, okay? So if it's a more important repository that we expect to be more valuable, it's more likely to actually receive coverage that investors can come across. Do investors care about these repository releases? Maybe there's a news announcement, but it really doesn't matter. Maybe it's not really value relevant. To get a sense of this, we took a look at earnings calls. We found about 2,000 earnings call transcripts that contain explicit discussions of open source topics from 2002 to 2021. I've got an example here. We do a full analysis of these earnings calls to get a sense of how managers think about the value that's generated through open source. But overall, it seems to me that, or it seems to us that analysts do ask questions about these repositories, and so they seem to be value relevant. Finally, a little bit more hard data we have, or some hard evidence. We find abnormal trading volume on repository releases, particularly for large firms. So we do see direct evidence of investors trading more when these repositories are released. Okay? So it seems at least that we believe there's the potential for value relevant information to be conferred through these stock price reactions. We're following the procedure developed by Kogan et al. Importantly, this means measuring the 3-day cumulative market-adjusted return following the repository release and separating it into 2 components. There's going to be an idiosyncratic component, okay? That's firm-specific. That's just what's attributable to random noise on the particular day. And then there's the actual information, okay? And this is the value of the repository, the net present value of the repository. As with Kogan et al., we estimate this as using a truncated normal distribution. Importantly, this is assuming that the net present value of the repository is positive, strictly positive, okay? This doesn't mean that we're sort of truncating observations at 0. Anything that has a negative return we set to 0. It just means that we are assuming that managers are not going to release this repository on GitHub unless they think that this is still going to be able to generate some value for them. It's a strong assumption. We did some more digging into this particular assumption, and it doesn't seem to have a significant effect on our results. It's going to have an effect on the levels that we estimate, but the cross-sectional information that we're able to pull out of these estimates is not affected by this assumption. And all of the results we find are not affected by this assumption.
But wouldn't it be more realistic to have a positive mean but still noise? Like Google, for example, didn't think that the market was going to react poorly to their announcement of their model, but the market still did.
Yeah, no, the example I agree with. What's your, in particular,
so
you're saying?
That normal distribution has mean 0, right? I mean, it's truncated. Why not have a positive mean but not truncated?
This is easier to work with in terms of actually calculating this particular distribution.
I would think that a non-truncated distribution probably is easier.
What would the mean be?
Whatever the mean you're assuming now, right? It seems kind of counterintuitive to me to model the impact of how the investor is going to see this versus...
No, I can see that. I suppose what you could do is you could do a truncated normal distribution, estimate the mean from this distribution, use that as the mean for a not truncated normal distribution. That would be possible. Yeah, I suppose that could be an alternative. The alternative that we've gone with is rather than making sort of any distributional assumption, we've just worked with the raw returns. I think that's even more transparent. And as I said, everything kind of goes through if you just work with returns. The real reason we're using this, I mean, I do buy the assumption that managers are sort of, making an assessment of whether this is worth posting on GitHub or not. But also this allows us to be comparable to what the literature has done. So Kogan et al. Estimate this with patents. There's another paper that's estimating the value of trademarks using this methodology. So it allows us to get comparability, but that would be a potential alternative. Okay, so I'm just about out of time. This is the overall strategy for estimating the value. As I said, we find that it's on average about 842,000, but that's grown significantly over time. Most recently, our sample ends at the end of 2023. The average is about 1.3 million. So this is increasing over time. Validating our measure, we do a bunch in terms of looking at strategically timed repository releases. We find that that isn't a significant concern for our value estimates. Does it contain actual information? As I said, it ends up predicting significantly whether the repository ends up being more popular in the future. And we run placebo tests using randomly generated repository dates. This is the coefficient from the placebo tests. This is the true coefficient, okay? So this doesn't seem to be just random noise or some sort of spurious correlation that we're finding. There really seems to be some information that we're capturing. Much more in the paper. If you're interested, I'd recommend checking it out. We've got an updated version that should be coming out soon. But I'll just conclude very quickly that we compile a comprehensive data set of open source activities on GitHub. We're estimating their private value based on stock market reaction. Private value is generated by open source innovation, mainly comes from the software industry and AI-related innovation. We find that this sort of inherent excludability, the ability for repository or for projects to be difficult for other firms to use, and competition concerns more generally, particularly matter for open source project value. And finally, that the private value of open source innovation predicts long-term firm growth, but it also seems associated with creative destruction and limited peer value. So this idea of open source growing the market at large, this sort of optimistic view, the evidence today at least doesn't seem to be consistent with that. That's all the time I've got. Thanks so much.